We have to start with the capex guide. Again, Google, the parent, saying that it will spend $175 billion to $185 billion this year. That had been the estimate of $119.5 billion. Shares throwing a little bit of a tantrum. What do you make of that guide?
I think anytime that you surprise it with spend, which is what Alphabet's doing here, it's a little less constructive than Meta that had kind of pre-warned for 2 quarters, leading into it. But having said that, it's front-footed spend. They're doing very well in search. You talked a bit about AI overview, and they're growing the search business 17% in the quarter. The cloud business was expected to grow 38%. It grew 48%. That's a business that's going to be approaching levels of $100 billion of revenue in 2026. And so I think there's a digestion period around this spend and the implications in terms of free cash flow and a DCF. But I think this is very positive for the AI ecosystem overall, that this cycle is very much still intact.
Well, when it comes to search, when it comes to advertising, are you able to draw a direct line between the spend that they're putting up with these capex numbers and some of the results that we're seeing in these businesses?
So you have 2 aspects of it. You have the infrastructure spend related to Google Cloud and the acceleration that business is experiencing. And then you have the cost of delivering AI search throughout the business as well. And both are significant costs. The computational costs related to AI search are higher than legacy search, although those costs are coming down. They're still higher. The monetization of AI search is still lower than traditional search, but the company has said historically that they think ultimately it will be higher. So I think there's still benefits from monetization in search, and I think that it's still very early days in terms of this improvement and growth in the Google Cloud business, which very much justifies the investments. You have to think about this as a cycle that's almost 5 to 10 years in building relating to the capex spend, and the revenue streams, are just starting to flow through. So again, I'd say it's a little bit of a net negative because the market has to process the implications of the incremental spend, but it's a very positive implication for Google as a company, and I think for the broader ecosystem. If you referenced a few of the infrastructure names, trading up after hours as well.
So this gets to the idea, though, too. I mean, what do you actually want to hear the executives sort of articulate on the conference call longer term? And I'm not just talking about hard number forecasts, but really about the vision of what they want out of this.
So I think you want to hear that what you're seeing in the reported results, which is that consumers are gravitating to where the investment is going. So on the search side, you're seeing usage of the AI tools, and that's not only true for Google, but it's true across the entire, AI complex from a consumer standpoint. And so that's happening, and the company needs to be spending behind that to be able to provide those services that consumers are demanding. On the cloud side, you can see it in Microsoft's results, even though they weren't well received. I mean, that business is growing 40%. This business is growing almost 50%. Tomorrow night, Amazon's going to report a business that's on a run rate to do $150 billion of revenue that's growing up near the mid 20% range again. And so I think that, the spend and what you're going to hear is that this spend is very much justified. And I think that there are data points, at least existing today, that suggest that that's very much the case today. Now, the longevity of this cycle, will remain debated in terms of how long that revenue acceleration for these companies lasts. But I think the data points, most recently for all the hyperscalers are very positive.
It's funny, you mentioned Amazon, and we're going to get their results in about 24 hours. I am curious, specifically on the AI front and everything that's been going on with Anthropic. I mean, what is their position right now in the AI space? How do you see it?
AWS is still the largest provider of cloud services. It's going to be north of $150 billion in revenue this year. Given its size and given the fact that it's been a little later to adapt to some of these AI features and functionality for customers, the growth rate has lagged. But they just launched Project Rainier, which is almost exclusively utilized by Anthropic, and that's going to drive pretty meaningful acceleration in that business in 2026. So I'd say AWS has been viewed as a laggard, but that that narrative is in the process of shifting throughout this year. Having said that, I do think Azure and Google Cloud will continue to grow at very high rates as well.
All right. Oh, sorry.
One more, Scott. Before we let you go, Apple in January, it announced that it had chosen Gemini as basically the AI technology that's going to help revamp Siri, which was notable at the time because they could have gone with one of these AI startups, if we're still calling them startups. So this earnings call is going to be really the first time we're going to hear Alphabet's leadership address that tie-up. And I'm curious to know, first of all, what you make of that, and when it comes to specifics there on that partnership, what would you like to hear?
So they have a very strong relationship historically with Google Search integration into Apple, and I think whatever this AI cycle is going to be in terms of consumer engagement, it's likely to happen on an Apple device. And so the relationship with Gemini and the features and functionality that Apple can integrate into its platform because of that relationship just furthers an already strong relationship going back over many years that it's had with the search business. And so to hear Google talk about their product portfolio, whether it's the relationship with Apple or independent of that, I think is what you want to hear from the company tonight. And it's how good their product is and how much better that it's getting relative to the legacy Blue Link search. And I think we're starting to really see the benefits of that. And what's interesting is, in this past few weeks, you've seen the infrastructure companies go down because there's questions about AI, and at the same time, all the software companies are going down because the AI is going to destroy their business model. So it kind of seems like it can't be both at the same time. And I think now we're going to start to see that sorted out with results like those from Alphabet tonight and what we see from Amazon tomorrow.